All right, folks, we'll get started in just a minute. Hang tight. All right, welcome everybody to Stock Analysis Friday. My name is Ben McDowell with TradersCoach.com. Great to have you here. All right, let's just make sure the audio is working and everything. Make sure you can hear me okay. Should be able to see my cam now and all that kind of good stuff. All right, we're going to jump into a few administrational items I got to cover before we get into the charts. Actually, just a few quick announcements. What we're going to do here is look up stocks and ETFs you want to look up. I've got a few I want to show you as well. I want to go over oil. I want to go over gold. I want to go over Bitcoin and things like that. So we do want to cover that kind of stuff. And also, to make sure you type in your stocks or ETFs in capitals. That's really important. It helps me see it clearly. All right. So I think without further ado, let's jump in. Okay, first thing I have to go over, of course, are the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really go hand in hand. But you need to know about the risks, and you need to know it's possible to lose some or all your money trading the financial markets or even investing in them. Okay, very important to protect yourself with risk control on each and every trade. Also, too, check with your financial advisor, accountant, whoever manages your money to be sure anything we talk about today is suitable for you. We don't know your personal situation. They do. So if I recommend a stock, that may or may not be suitable for you. So definitely check with them before actually initiating a trade. And then finally, if you need help on a variety of different factors in the trading industry, I just came out with a great book called Money Management for Traders. And if you're having trouble with risk control, that's a great book. That's a book on the far right in green. And this will get you up and running with proper risk control. If you want a deeper dive, go into the risk and ruin tables and all that kind of good stuff. The Trader's Money Management System on the far left is a book that handles that. I'm working on the second edition of The Art of Trading. Should be out this spring, being published by Wiley Trading. And we're working on that as we speak. All right, Survival Guide for Traders. That's a great book to learn how to run your trading like a hedge fund. And it's a great reference book as well. And then the other book I have is The Elliott Wave Techniques Simplified. So a lot of good stuff out there. You can get all this stuff. I'll put the link in the recording area for our Amazon page. All right, when we look at charts, we're going to be looking at a lot of proprietary software that I created over the last 30 years of trading the financial markets. And basically on the top row is our charting software, middle row is scanners, and bottom row is risk control software. You're going to be looking at charts with the ART, OWL, PTF, TLM, and ERI on them, on the charts themselves. That's the top row. If you want to learn more about this, I'll put a link in the recording area as well on how to get our software, but you can also go to our website. And then finally, like, subscribe, and share. All right, the whole success of something like this comes down to the number of people we can get here. And we are a specialized type of service. So we don't expect 1 million viewers, but we do like to get as many as we can, because the more people that come here, all right, the more stocks we can look up and the more stocks we can find. Nice thing about this service, which we really didn't anticipate until we actually got going, is, you know, we offer a second opinion. You bring your stock, we'll tell you what I think it should, where the stop should be, where I think it's going, and things like that, or if it's a viable trade. But the other thing too is we may uncover a couple stocks that are good for the entire group. So it almost is like a stock picking service at this point. All right, let me come out of here real quickly. All right, I want to welcome everybody. All right, some stocks are starting to come in. I see Tesla, all sorts of good things. I'm going to go over just a few that I wanted to cover. So while I'm doing this, go ahead and continue to put your stocks in there. And one of the first things I wanted to actually discuss is when you look at my layout here, this happens to be the NinjaTrader charting platform. I've got 3 charts, all of the same stock. So it's all of USO here. And I have a 60-minute chart on the far left, gives me my short-term aspect of what's going on. And then I have the daily chart in the center, which I call the intermediate aspect. And then the chart on the far right is the weekly chart, which gives me my long-term look at the markets. So basically, I do this for timing. I look for all 3 time frames to be in sync for a possible trade and give me a good overview of what I'm looking at. So that's why I have 3 time frames of the same stock. Now on the top here, these are our scanners working. We probably won't use those much today, but when I do stock opportunities or stock picks each and every week, I rely on those scanners to uncover the ones that are good for that week. All right, so let's take a look and see what's cooking. Oh, and one more thing. At the end, I usually put up a live feed on the intraday futures data, and we'll take a look at things like, I'll probably use the macro, so the micro E-mini, micro Nasdaq. So we have that running towards the end of the session as well. So a little bit of something for everybody. All right, USO. This is the oil ETF, and ETFs are kind of similar to mutual funds, except they're more liquid in terms that they trade throughout the day. There are some fees involved, but if you get the direction right on the trade, the fees are nominal. So ETFs are a great way to participate in some of the markets that traditionally used to be participated only in the futures market. All right. So, and it spreads the risk out because it's like a mutual fund. It's an index. Now, when we talk about the USO, some of these, especially when we get to the inverse ones, they are kind of derivatives on the underlying index. So keep that in mind as well. All right. So USO is the oil ETF. Now, I'm kind of thinking that I'm going to open up this chart over here on the weekly side. Let's just take a look at this real quick. And we've had a nice move off the bottom, but now we're getting a retracement. So this is the target zone for the retracement here. So we're moved up, little ABC correction. And so now we're seeing if this is a bottom or not. So we kind of are watching this pretty carefully. Now, one of the things is that, and you can see on the daily chart, it reached the target zone as well. But this is concerning. We have an indicator over here on the far left on our 60-minute chart for USO. That is red. Now, this has a 75% accuracy rate, so it's not right all the time. But the fact that it's red is keeping me from going long on USO right now. I need to have that either abruptly turn green, or if it's correct, it's saying basically that we're going to make one more low in the market. So I don't want to go long yet. I eventually do want to be long because we're in the retracement zone, but it looks like it may go back into the retracement area. So we're going to hold tight on that, but we are kind of taking a look at it. The other one I wanted to go over is silver. You know, a lot of people have been recommending silver. If you go to the YouTube channels, they're saying buy, 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 and many of them were buying way up in the upper 20s there. But now it's at 17. All right, it's still not a buy for us. I'd like to get into silver eventually, but we have a red PTF, as you can see, that indicator that's red here on the daily chart will keep us from going in at this particular time. So it looks like we probably will go back into this little area here and then maybe come back down a little bit. But for right now, we're holding off until that PTF turns green. And then gold is another one I want to take a look at. These are the metals. And gold, as you can see, is still going down as well. So very interesting. All the metals are usually a place, you know, the markets are down year to date, pretty big time. All right. And we think they're going to go down even further after this initial bullish run that we're in now. So with gold, it's interesting. It's still coming down, even though the markets have suffered this year, because usually a lot of people take their money out of the markets and put it into a safe haven like gold. Hasn't worked this time. And there you have it. So gold is coming down. It's at 152.77 right now, but it looks to us like it may be close to bottoming. And we want to probably get long at some point, but don't do it yet. It's not ready. Now, on the cryptos, all right, I want to take a look at GBTC. All right, GBTC is the ETF for cryptos. Now, one of the reasons why I like to trade the cryptos on the ETF stage is because of liquidity. I've heard of several people that have been locked out of their crypto accounts, can't get their money out. But at least with GBTC, you can always get in and out during the day because it trades like a stock. There's liquidity. So we're looking at this for a possible long position, but it hasn't bottomed yet. If you look at the PTF on the 60-minute chart, it's still red, still going down. We still have a red owl, which is this histogram here on each chart showing negative momentum still. So not quite ready for a long position. We'll see if it starts to perk up at some point and allows us to get into a long position, but do not go into it yet. And then the final stock I wanted to cover today is a stock TLT. Whoops. And let me just bring that up. Give me 1 second. Interesting. Pointer all of a sudden changed to this, and I don't know why. Well, that's kind of interesting. Let's see if I can get it now. There it goes. Got stuck in the text area. All right, so now I've got this text thing I can't get rid of. All right, well, let's try this. We'll do this in a minute. Okay, so TLT is the bond fund, and that's ETFs, and that is still heading down. It is getting really close to our target. But notice we've got red owls on all 3 time frames and a red PTF as well. Target on this is 91 to 73. So I think this is getting close to a bottom, but it's not there yet. So stay away from TLT until that thing bottoms. And, you know, with interest rates possibly going up another 75 basis points next month, according to an announcement that came out today, that looks like it will probably continue to go down until that tightening actually has an effect on inflation. So that's kind of where we're at with that. All right, so now let's take a look at what you guys want to take a look at. I like to cover those because I usually get asked on those, so we'll kind of see. All right, Tesla. Let's see what we got here with Tesla. And this is for Lee. Lee, how are you doing? All right, give that a second to load. Let me just see if I can get rid of that. Let's try this, see if that works. Huh, nope. Okay, so on Tesla here, we're obviously in a downtrend. You can see the bearish pyramids pointing to the downside. That indicates a downtrend. And also to notice that the owl is still red on both the 60 and the daily. So it's coming down still. But if we look at the weekly chart, let's open that up for a moment. If we look at this chart here, notice that we are sitting right here in the target zone with a green PTF, which indicates that we have a 75% probability we're going to return and get above this high. So it is a possible bullish play. The only issue is short term, we're still coming down a little bit. So in terms of timing, this is why I like to look at the 3 time frames. In terms of timing, we're getting close, but we're not quite there yet. And we just basically went below this low here recently. And notice we're starting to see bullish divergence a little bit here. So it's getting close. We'll take a look at it next week, but don't do it yet. All right, we still have an active short in play there. All right, so don't quite go into that yet. All right, UNH. Let's see what that one says here. Okay, let's see what we got cooking on UNH. All right, first let's open up the weekly chart. Very strong. All right, now if you're an Elliott wave person out there, that is without a doubt a wave 3. A wave 3 is a huge hyperbolic move, and there you have it right there. Now, the only problem I see with this right now is a couple things. One, it's a very mature Elliott wave 3. So it would have been nice to gotten back in here early, around 2013 or so, right? But now, all right, we have bearish divergence building, okay, inside the wave 3. So that's an indication that the momentum is starting to wane a little bit here. So you want to be careful about not getting in late. Now I have no green PTFs in the lower time frames, so I have nothing telling me we're going to make another high on this. So I'd be a little bit careful here. You may get one more high. You may get one more high, but I can't really, from a form of technical analysis here, indicate that that is a high probability scenario. You have bearish divergence building here, all right, but you don't have it here, okay? So that's kind of interesting. So you may get one more move up over the next week or so, and that may be it. But I don't think this is probably a good trade to go long into, and I don't think it's one necessarily to go short right now. So I kind of put it on the hold list. I think you're going to get a big opportunity to go to the short side on this at some point, but hold off a little while. It may have already topped, and we may just be in a slight up move like we're in the Dow right now, going up a little bit. So hold off on that, but getting possibly close for a short position. All right, Patricia, welcome back. How you doing? All right, so let's see, ET and LNG. Let's take a look here and see what we got cooking here. So we got ET, extraterrestrial, right? All right, so what do we got cooking in here? I'm seeing a red PTF on the 60-minute. So basically, any move up recently is going to be temporary, and it looks like the PTF over there, unless it changes, is calling for one more draft to the downside. So that's kind of where we're at now. But let's take a look overall and see where we are on this. Because we had a big move down. Look at that, huge. All right, so now this is also, this is a great example and builds a case for trading versus investing. So if you were an investor here in 2009, went all the way up and all the way back down. So now you're exactly at the same price you were back in 2008, right? So the buy and hold would not have worked too good there, right? So opportunities to go long could have made a lot of money there and some money to go to short side. But now what do? So now it seems to be trailing off. So what we kind of want to see is this a bottom? All right, that's the key, because if it is, then you want to catch that next move up. And I would say, look at what happened. You had a big move up, big move down. They could not take the bottom out, and then they rose back up. So I would say probably looking at this, we're a little bit in an uptrend. But again, here's some conflicting issues here. We got bearish divergence building in this move up. So not so sure I'd go into that quite yet, which is what I think the 60-minute chart is saying, is basically we're going to have a little bit of a correction here before it resumes to the upside. So if you're long already and you don't want to watch the stock go below 10 bucks, then take some profits if it starts to go down or goes below this particular pyramid here. Otherwise, if you're thinking of going long, I would wait for the retracement. Okay, and that is ET. Let's see what else we got. LNG. All right, so here we are on the LNG here. Okay, so let's take a look at that to see what we got cooking. So we looked at this one before, probably a while back. or at least last week. And it looks to us like we're thinking about having a correction on this one as well, because here we're having bearish divergence. So again, great trade down here, risky trade if you're going to go long here. That's the problem with this. So if you want to take profits out of this swing, you use the pyramids. You got one forming here. If we go a little higher, your stop will go right here. Otherwise, if you're thinking about going long, you'd probably be better off waiting for the correction down into this possible target zone before it goes again. So I think we're due for a correction. We may get one more quick high on this. Notice the bearish divergence also building on the daily chart. And we've got this here. So this is calling for some type of reversal to the downside. So I would stay out of this on going long. If you're long already, use the stops. In fact, you can use this one right here, this pyramid on this time frame right here. Put you in the upper 160s for a stop, which will really capture your profits well. Okay, so that's kind of where I would do that. All right, so let's see what we got here on here. Let's go here. Okay, the Q's here. All right, so there we have this one moving down, and it looks like everything is red. We may get a little bit of a pop retracement up just a little bit, but for the most part, it's still heading down. Now, what's interesting here is that we have bullish divergence here and here. So pyramids are still actively showing a short side in play here. So I would not do long yet, especially with the red owl, but you may be able to get some type of push back to the upside at some point. Okay. All right, let's keep going here. Patricia's saying she had 22 days without internet. Oh my gosh. Okay, so you're in Florida, so you got hit by the storm, right? Well, I hope you're okay. All right, SBUX. All right, so SBUX, give that a second to come up. All right, so it's already come down and now it's bouncing to the upside right now. So notice you had the bullish divergence here before the move up. All right, so that was an indication we were getting close to a bottom and then a move up. It looks like the PTF is green over here, even though we've kind of gone a little bit sideways. It should resolve itself back again higher. Now, let's take a look and see on the weekly chart what's going on in terms of the overall movement here. So here's your COVID low, okay? So I imagine probably a little bit more of a move up to the inflection point, which is the distance halfway to here. You can even draw a fib retracement on that. But it could come back down. It'll be interesting to see what prices do when they get to that inflection point. So you got to be a little bit careful there. But basically, I would say that inflection point is going to be around 110 or so, and we're at 87. So you may see movement up to 110. Now, what I will tell you with bearish divergence here, let this thing correct. If this is a bottom, it will hold. And if you let it correct, you may get a better price before going back up. If you want to go in now, put your stop at the very bottom. So that's going to be right around the little under the $70 mark. That way you can survive a pullback. So that's kind of how I would play Starbucks. So I'm looking for more highs short term on this, and then possibly a more significant correction, and then more highs after that, if the bottom is in. And that is that one. All right, let's see. Okay, that one was for Adam. All right, any others? All right. Okay, so you're hedging a long position, Lee. That's fine. Let's take a look at the SQQs for a minute. Speaking of hedging, right? So the SQQs are the inverse ETFs on the Nasdaq. Now, if we open up this chart, look at this thing, boom. So during the bull market, this inverse ETF is obviously going to come down. During a bear stock market or bear Nasdaq market, this is going to go up. And we're starting to see, if we go ahead and zoom in here, we're starting to see that it has gone up. Now, it may not look significant here, but if you look at where the low was, 30, and look at where prices are 57 and they were at 65, that's a 100% increase in value. So not too shabby. So I've been recommending the SQQQ to protect portfolios against a falling stock market. And we think it's going to fall quite a bit more, especially next year. And so this may be not a bad vehicle to hedge your positions or even make money on the short, so to speak. But again, talk to your financial advisor and see if that's appropriate for you. And you can see here we've got a nice move up. Now, the market is up today about 234 points on the Dow. It's up about 30 points on the Nasdaq. So this is a 3x ETF, a highly leveraged. So it moves 3 times faster than the underlying index. And so it really moves quickly. So it will fluctuate more than the underlying Nasdaq. Okay, will do. But that's okay, because if you get the direction correctly predicted, you'll do very well. You have to use risk control on these, all of them, anytime you make a trade, because you have to have a stop set and your position size set correctly, that if you get stopped out, your loss is controlled. So don't do a wild trade on this. Always use risk control. So I'm looking kind of, we're still heading up in the markets. We may get up to as high as 32,000 before the next big fall. And so this could actually go down in value and give you an opportunity to get in even at a better price. So I would hold off on this. We've got a red PTF and a red pyramid on the 60-minute chart. So it is coming down a little bit. It's pulling back, but not enough to really change the trend on the daily chart. And again, you want to have your stop pretty low on this because it will pull back. The volatility is pretty good on this. All right, so let's keep going here. All right, so we got PLUG, plug, and this is for Frank. Hi, Frank. Okay, so let's take a look and see what this bad boy is doing here. All right, so let's open up this chart here. Okay, so this is kind of an interesting chart. So we had a huge move up here, okay? Now we've got this big zigzagging motion here. Got a red owl here and a green PTF. So the PTF is telling us that eventually, after it starts to move back to the upside, we should get above this high here at some point. What the PTF, it doesn't tell you is when or how much of a pullback you're going to have. All right, PTF doesn't tell you that, but it does tell you that you should make another high above the previous high. So why is that helpful? Well, if you're trying to think about a trade here, then a long trade here could do really well based on what the PTF is saying. So then you got to use the lower time frames to help you time everything. So what I would do on this is we're coming down on this. I would not probably do anything right now on it because it's definitely coming down. If you had a short trade on it, you've done pretty well in this pullback. And look at the 60-minute chart. All right, you got a red PTF and a red owl. So I would not cover your shorts yet until that changes. So if you were using our software tools, and I don't know how you could trade without having good software tools, but if you're using our tools here, you would have to wait. You basically want to keep that short in place until that changes and have a stop on the most recent pyramid here, which could be right here. So stops are placed on the flat parts of these triangles. They always point in the direction of the trend. And that's how they work. So you trail your stops right to there. But with this red, when that turns yellow, I would take a few shares off the table. All right, because eventually this thing should head back up. That's PLUG. So bearish short term, long term, let's wait and reach a bottom and then jump in. All right, good. Anybody else? Going once, going twice. All right, well, I'm waiting for another stock or something to come in. I'll go to the futures market in just a minute. But interest rates, looks like interest rates are going to go up another 75 basis points in November. So that's kind of the consensus out there. It's not going to happen this month. It'll be next month. So we'll see what happens with that. They announced it a little bit more. One of the Fed people announced it over the last couple of days. Market kind of is rallying, so it didn't really affect the market. Some people on interest rates want the Fed to take a more aggressive stance to control inflation. So maybe the market's reacting to that aggressive stance. However, of course, usually rising interest rates do not bode well for the market overall. So keep that in mind. All right, Sue, what do we got cooking? All right, I think that's it for today on stocks. So let's go over and take a look at some of the intraday timeframes. So what I'm doing here now is I'm shifting to some of the futures markets that we like to day trade. And this happens to be the micro crude oil market. And we've also changed time frames when I switch. So this is a 1 minute time frame. This is a 5 minute time frame, and this is a 15-second time frame. So when you're trading on these short-term time frames, you are not looking at news. You're not looking at anything that can distract you from price activity. And basically what you want to do is kind of have a set of rules, which we have memorized, and use them and use discipline. All right, so what is this telling us right now? Okay, a couple things here. We've got to move up, but this is bearish. This is bearish. So I'm really reluctant to take a long position here. I'd be more apt to get short. So what I would do is we're almost at the point of inflection here. So we may get a turnaround. I kind of want to wait for a bearish pyramid on the 1 minute time frame before actually entering a trade. So we'll see how that goes. So this should be temporary. Maybe we might get one more leg up and then a move down. So we're just going to wait this one out at this particular point. All right, let's go to the E-mini here and take a look at that. All right, so this tells a different story. This you want to be bullish on. So if we were day trading this, the entry would have been on this pyramid, okay? And our target is at least above here, but probably a fib retracement would put it even higher. So this is one you'd want to be long on at this time. So kind of fun. Let's take a look at the Nasdaq here. All right, hit a top here, but we still have the correction now, and now we're going back up. So I think we got another possible long position here. It looks real strong. There's your pyramid entry here off this pyramid. Enter on that peak, stop here. All right, and you're in good shape there. I think all the equities in the Dow will probably be similar because they're all moving up now. And also to the M2K is another one people like to trade, and so do we. And there's that one. Let's take a look at gold. All right, gold is a bullish trade this morning too. Okay, so that's the intraday time frames. We use the same software tools and structure that we do on the longer time frame. So we can do that because of the fractal symmetry in the market, which means that if I remove the X and Y axis, which is price and time, you wouldn't know what market you were looking at. So if your system uses price patterns and technical analysis, all right, it basically should work on all markets and all time frames. All right, the SDOW. Let's take a look at the SDOW for key here. All right, SDOW I think is a good thing to be long in. I think though you have to also make sure your stop is not too close. For my recommendation on the SDOW, which is the inverse, okay, of the Dow, is that what you want to do is if you think the market is going to sell off in a big fashion over the next year, then you want to try to capture that sell-off through the SDOW, which is an inverse ETF. The problem a lot of people do is they put their stops too close because these ETFs can be pretty volatile during the different swings that the market creates during even a regular trend, either up or down. So if you have your stop too close, you may not achieve the goal of making it to your target zone. So keep that in mind. So it's really important to keep your stops as low and far away as possible. And that means reducing your position size to account for the wider stop. So if you look at this here, All right, we'll open this one up and you can see a very similar situation as you had before on the SQQs, okay? So we've got a target way up here on this, which means that the Dow would have to fall quite a bit, and we think it will. So it'll be interesting to see if we make it to that target. But in any case, right now, if you're thinking about going long, what I would wait and do is try to time it a little better. This is green, that's good, but this is red. So you want to wait for that to turn green. This is red, and we have an active pyramid to the downside on that time frame. So I would not go long yet. This is why I love the multiple time frame analysis, because while this says it's great for a long position, this is saying, ooh, just wait a little bit, and this is saying not yet. So you want to kind of try to time this to where you get a confirmation on the different time frames, okay? So keep that in mind. So I like it for a long trade. If you're in it, just make sure your stop is real low. You could have it at the bottom of this pyramid, or if you want it to be real safe, at the very bottom. But at this particular point, if you're not in it, I'd wait a little bit, okay? Give it a little time. And if you have our software tools, so many do, then you can use our tools to do the timing. I can tell you, if you do not have the right tools in this business, it's really hard to be a technical trader, that's for sure. All right, BMY. All right, so we had a little bit of a retracement zone figured out here. It hit it and then bounced off it. Now, this one, BMY, has been a very messy chart. I mean, look at this chart compared to some of the other charts. Look at these wild swings. Right away, that tells me in a volatile market like this, and this is how it's been for almost since the beginning of its inception, right? So you have to be careful on your stops, critical stop loss placement, because you could be right and still get stopped out because of the unusual volatility you see on this market. Just saying. All right, so this is starting to, not go much lower. It's starting to improve, which is a good thing. So maybe we have a bottom. Let's take a look and see if the longer time frames suggest that, or the shorter ones. Okay, this one does not. Bottom's not in yet, so it's going back down. So any long position here, we're not going to take. And the reason for this is this indicator is indicating one more low below here possible. And we could get a retracement up to 56 before it turns. But if this stays red, it has a 75% probability of being accurate. It's basically saying eventually it will return and go below the low. So again, that's why I love the PTF indicator and having the right tools, because basically that's keeping me out of an emotional long trade or a long trade just because you reach the retracement zone. Okay, it looks like it may not hold. It looks like it's going to head back down. So I'd be a little reluctant on taking this to the long side. All right, that's BMY. That's for Adam. All right, so I think I got the SDOW already. All right, what else we got? All right, the other ETF, if you are keying in on the Russel, the other inverse ETF on the Russel is the TWM, okay, the TWM market. And again, this is going to look like just about all the other inverses that have to do with the stock market. If you look at the weekly chart, huge move to the downside. And then there we have this coming up. Now, again, things are starting to look pretty good here. I want to point out one thing. You've got a pyramid entry here and then here. You would have entered here because you cannot enter on a red PTF, but it changed. So now you can enter here. So your stop is here, or if you want to be super conservative, you can put it at the first pyramid. But in this particular case, this is an MP minor, all right? That's not indicating a new trend. It's indicating a correction currently in the dominant trend, which is up. That's what a minor pyramid stands for. And the reason we show that is to give you a heads up on a possible correction, but not a change in trend. Also, we use it for scaling out sometimes too. But in any case here, I think you're probably, pretty good shape. Doesn't mean you might not get a little bit more of a pullback. We've had a long owl here. All right. And so you might get a little dip, but if you have your stop here, I think you'll be just fine. That's below the inflection point. So I think you'll be in good shape. So again, these are all looking as good markets to take advantage of a falling stock market, so to speak. All right. Anybody else? Netflix. Good one, Paul. Netflix. Let's take a look at that. All right. So let's open up that weekly chart first. So Netflix, we are kind of looking for a bottom, and it hit it right here. We've looked at this before, but this is concerning to me. So it's not a final bottom. When I have a red PTF, unless that changes, right now we're only in a correction. And if you take the inflection point, we probably could correct pretty high. So we're going to keep an eye on that. So the next point of resistance is up here at this pyramid. All right, right around the 400 mark, right? So I probably would think we may get up there. This is close to going green. And so for this to be a true correction, it has to be green. So it probably will get up there before the correction is done. Now, let's take a look here and see. Again, red PTFs, big cause for concern because you can't call this a bottom. So we're in a correction. Again, could get quite a bit higher in the correction, but it could end at any time. And you have to be careful here. All right. So this was the short-term target zone here. We hit it. And as you see on the 60-minute chart, the correction's not over. Okay. It's still bullish. Bearish, bearish. All right. But we're in a correction. So when you have the 60-minute chart bullish, but you have the longer-term charts bearish, then that means you're in a correction, a bullish correction in a dominant downtrend that's not over yet. Okay, so that's how I kind of look at that. Now, if those indicators change, all right, then that changes things. But currently the PTF is red on the daily and the weekly. But we'll keep an eye on that. So come back next week and we'll look at it next week, see where it's at. Anybody else? One thing that's really important when you trade using technical analysis is your system has a set of rules. And in these rules, I call some of the things that we look for as connecting the dots. So when I look at a market like this using 3 time frames, I'm connecting a lot of dots. And when you can do that, you basically can look at a market and in 20 seconds know whether you should be long, short, or out of the market. So that's your goal as a technical trader, is to be able to connect those tested dots to come up with a formulation of whether you should be long, short, or standing pat. So always work on your quickness in connecting the dots in which you use for technical analysis. I'm going to put a whole chapter in my new book coming out next spring on connecting the dots. All right, anything else? Let's go back over to the futures market real quick, all right, before we wrap it up today, and just see if anything's cooking over here. All right, so we got this move up that's still in place on the, this is a 1-minute time frame, 5-minute, and 15-second. So we still have our multiple time frame analysis. We just changed the time frames. So we're still moving up here. Let's check that MES for a minute, because that was bullish too, and that is moved up nicely, quite a bit even since we logged back in. So looks like it's heading up to a possible PTF high here. All right. So when this turns yellow, you can knock out maybe half of your position and then keep the rest on. You probably could do a fib extension target zone here and get an idea of where this thing is going, but it probably is going to be a little bit higher than the top there. See if my drawing tools will give us that here. Let's just take a look here. So kind of the target is right here at the high, which is right where the PTF is. Okay, stops. I wouldn't quite, you haven't really had a really super big turn down. So if you're going to try to make it here, you want to kind of keep your stops low. So I would kind of keep it back a little bit. And you got a green PTF on the 15-second. So that's bullish. So there's no reason to be panicking out of a position here. All right. So this is exactly how we use our system to day trade the different futures markets during the day. And it's basically the same as how we position trade for the most part. A little different. I tend to scale out a little bit more aggressively when I day trade these lower time frames, but basically it's the same. All right. Well, I guess I will leave it here and we'll call it a day. And I want to thank everybody for coming. And I'm trying to think, did we have a winner today? I don't think so. I don't think we had a winner. Let me just see. Let me check my notes here. I think I'll give you a winner here. Hold on. Let me go back to Netflix and we'll come back here. But let's go back here real quick and take a look at one I liked, IBRX. Again, can't guarantee anything, but this one started to look pretty good. All right, kind of got consolidated here. But what I like about this one is look at the target zone up here, way above 45, and we're at $5. So that's a huge move to the upside. However, it's pulled back a little bit over the last couple days. You can see that. So this is red, this is red. So I don't think I would go long yet, but if it breaks out here, okay, you're good to go. All right, pyramid trading point entries were earlier. So, you know, just wait. Maybe you get a little better price when it turns around. Hard to say. All right. So if it pulls back a little bit, these pyramids will go away. And then when the momentum comes back on the owl, you can buy and maybe get in at even a better price. But this I'm liking for a long trade. So I really can't put this on the list yet because we have a red owl on the lower time frames. But anyway, that was a pretty good one, I thought, that we're keeping an eye on. All right, back to the MES here. All right, so we'll see how this one does. I'm going to let this run for a little bit. Okay, don't be surprised if you get a pullback. Notice now we have a yellow PTF over here. So, you know, if you got in super early and wanted to take a little bit off the table, this is a scaling out indicator as well. Otherwise, you just keep the positions on, keep your stop low enough to survive a pullback, and you'll be in good shape. Green PTF on the 5-minute time frame, not really worried about this. I think it should definitely, from a probability standpoint, go higher, okay? But it doesn't mean you won't get a pullback. All right, so listen, I want to thank everybody for coming today. Great stocks to look at and ETFs to look at today. We'll be back next week, next Friday. Definitely join us again and have a great week. And remember to always use risk control. Thanks so much, everybody, and give us a like. The more people we get here, the better for all of us. Take care. So we have a forming pyramid. Do you see it here? It's blue. If prices get over the apex, which it just did, it turned it green. Okay, and now we're getting fairly close to the target. So I'd move your stop up here. Okay, at this particular point. All right, so we're going to end here. Have a good week, everybody. We'll see you back here next week. Thanks again for coming, and we appreciate you coming, because the more people we have, the better. All right, so we'll see you next week. Have a good one.